Welcome back. We are just awaiting the consumer price inflation numbers for the month of November. The number has come in at 5.41%. One sec. Yes, that is the November number, 5.41. That's higher than the 5.38 which our polls were putting out. So inflation slightly higher. I'm not surprised with that because the food inflation number was a little higher in the wholesale price index. We will have to wait for more details on the exact contours of the food inflation. I think food inflation, yes, we have that as well. That's come in at 6.07%. So quite clearly that is the culprit. Month ago, the food inflation had risen by 5.25%. So this rise in inflation from 5% to 5.41 in the month of November can be attributed largely to the rise in food prices. Some details. I think it's meat and fish that's gone up by 5.4%. Pulses have gone up by 46%. That really is the big culprit. Food and beverages generally have gone up by 6.08%. So there is a big inflation number coming in from meat and fish. We saw that in the wholesale price index as well. Vegetables have gone up by 4%. That was largely accounted for by potatoes. Oil and fats has also gone up by about 7%, 6.99 to be precise. But it's pulses and pulse products that have really shot up, taking the food inflation number to, that 6% level. It's a rather ugly number, you will have to say. Food and beverages generally 6.08%. Clothing is up 5.8%. Even that actually is higher than in previous months. If I remember right, last month we had lower numbers even for clothing. I'll just give you that in a minute. Yes, last month it was 5.68, while footwear was 4.74. This time even those numbers are slightly higher at 5.24 for footwear. So clothing and footwear generally are about 10 basis points higher. Let me come to housing. Housing has come in at 4.95. That's marginally higher than the previous month, which is October. What else do we have? Miscellaneous as a whole is up 3.78 compared to 3.5 in the previous month. Miscellaneous generally comprises services, but within that, let me just get you health and education. Health is up 5.3% compared to 5.3 last month as well, and education is up 6.13 compared to compared to 5.98. So clearly, education has gone up by about 20 basis points compared to the month of compared to the month of October. So this is the picture really. It is largely a food-driven rise in inflation. I must add that there was always a base effect. November of 2014, inflation was as low as 3.3%. It was always expected that the base will push it up to 5.3 from the previous month's October's 5%. But this extra 10 basis points rise that we are getting should be accounted for largely by food. You may argue that it is not very different from our poll. Our poll had expected that the inflation will rise by 5.38. At 5.41, it's only 3 basis points higher, largely contributed to by food, in spite of a fall in some of the services items like health. Medical services genuinely has fallen. So that's the picture as of now. We will get you more details in just a bit. Our experts are joining us. Siddharth Sinha, the Chief India Economist at Barclays, and Shubhda Rao, the Chief Economist at Yes Bank, are with us. Siddharth, you go first. What's your comment? Inflation coming in at 5.4 and food inflation coming in at 6%, 6.07 to be precise. Siddharth, can't you hear me?
Yeah, Lata, there's a bit of disturbance, but I can hear you just now.
Yeah.
Could you repeat your question?
Yeah, your food inflation coming in at 6.07 and overall inflation coming in at 5.4%. I also read out some of the miscellaneous numbers. Education is up by 6.213% and health is up by 5.31%. Overall miscellaneous up 3.78.
Yeah, broadly the picture is if I start from the headline, we were expecting it at around 5.3 compared to 5.4, a small marginal uptick, and as you have summarized it so aptly, there is a bit of upside surprise in food. But what is more interesting there, even if food inflation is bringing a surprise on the upside, it's not generalized. The general overall basket of food is going up. It's just 1, 2, 3 commodities which are actually putting a lot of pressure on the overall food index.
Now, a couple of products.
I would be somewhat more optimistic.
Well, I take your point. I take your point that it is actually meat and fish. Now, this month, it has also been oils and fats, as well pulses, of course, which is a runaway inflation of 46%. It is only cereals which have behaved themselves. Otherwise, the food basket seems to be spreading, isn't it? It's spread from only pulses to now including vegetables as well as, some vegetables as well as meat and eggs. Now, doesn't it look like food is becoming a little more troublesome than it appeared 2 months back?
I don't really think so, Lata, because if you actually see, it's the big culprit is still really the pulses prices, and there had been some initiative on the part of government of late, and we need to see given that pulses ultimately is it's not such a perishable item. So the possibility of us winning that battle at some point of time is somewhat higher, according to me. In fact, I would say I'm slightly surprised why we haven't really been able to contain prices here already. But I would expect some kind of correction in pulses prices at some point of time. And if the number, and as and when that happens, that can potentially be a significant drop in that particular basket, because this particular commodity, in this case, prices have gone up for a very long time.
Fair point. Well, I'll come back to you.
All of a sudden, the basket would look a lot better.
Yeah, Siddharth, I'll just come back to you in a minute. Jayesh Mehta is also with us. Jayesh, actually today we saw yields rising at a time when we saw some debilitating fall in global commodities. Will this number be significant for the bond market at all? This 5.41% rise and a 6.07% rise in food, should we worry?
No, in fact, this is quite positive for bond market. But the only challenge is we still have the Fed thing looming around, right? So if that thing was not there, I think the market had expected more in terms of, and especially this is most of it coming out of food. Market would have been very happy, but as I said, everything is right now on standstill till the Fed thing actually happens, right? So we'll have the sluggish thing, but yeah, this is slightly positive, I would say, for the bond market.
All right. Just stay on, Jayesh. We also have Shubda Rao joining us on the phone line. Unfortunately, we have problems with the camera. Shubda, what did you make of the numbers? Do you want me to read them out again to you? Basically, the numbers come in at 5.41%, as you would have guessed by now. Our poll was 5.38. Food has come in at 6.07%, much higher than the previous month, which was at 5.25. And within that, pulses, 46% higher.
That's right, Lata. I think, of course, we were slightly lower as compared to the consensus. We were at a 5/4 for the CPI, and the reason being that high-frequency price observations that we have seen has seen a fair drop in items like potatoes, cereals, pulses, and fruits, and that is the reason we have built in a slightly lower momentum in food as compared to what we have seen earlier on, and that is where the surprise came. Of course, with the WPI number having released in the morning, we did anticipate that our 5/4 would see some upside. Barring that, I think we are more or less in line with what has got printed, particularly say in housing or fuel and miscellaneous. Of course, the item which is palm tobacco intoxicants, which has typically been giving seasonally, it is very high in the month of November. But this time round, it has surpassed the seasonal, month-on-month momentum as well. So it has, for instance, come at seasonally month over month at about 0.91, which is significantly higher. I think that is also causing a little bit of distortion as compared to what we were anticipating. But having seen these and now, juxtaposing these with the prices on the ground on retail front today, we are already seeing on the ground correction in items which have exactly posed pressures in the month of November.